Hello guys, welcome to our channel. In this video, we are going to talk about the basic terminology and the minimum concept that a trader or an investor, especially beginners, should know and understand before entering stock market. If you like the content, hit the like button and subscribe to our channel. Okay. Now before stock market, let us talk about the term market. Right? What is a market? You might have heard many times. Okay, so let us define market. Market is nothing but a place where you go to buy or sell things. Okay, now based upon the trades or the commodities, the market can be differentiated. For example, if the commodities are vegetables, then we call it as vegetable market. For example, the commodities are fish, then we call it as fish market. Okay, this vaguely creates a differentiation between the market and types of market. Market can also be differentiated on the basis of demography on which it operates. Fine. For example, there is a Kirana store in a particular village. Okay, and that store guy is catering for the customers of that village. Then it is called as a regional market because he's only catering for a region. Okay, but whereas if a company, let us say like Tata Motors, who are catering for different countries, okay, now they are working in international market, right? So based on demography, the market can be classified into regional market, national market, international market, and so on. Okay, now as we have understood what is market, let us dive into the main thing, that is stock market. What is the stock market? Stock market or equity market or share market is where people go to buy and sell shares or stocks of the publicly listed company. Okay, there are many companies that are publicly listed in stock market. People go there, buy and sell their shares in stock market. Now, as we have understood the definition of a stock market, let us ask this question: why to invest in stock market? Okay, so there are many various benefits in investing in stock market. I am going to list out quite a few for you. Okay, number one, for potential high returns. Now, if you consider the other investment products or investment tools available for you in the market, okay, stock market historically has given a higher returns in long-term basis. Okay, for there are other example like bonds, debentures, FDs, mutual funds. Okay, compared to these things, stock markets on a long-term basis have given a higher investment returns. Okay, the next thing is ownership in the company. When you buy a particular share, a particular percentage of share of a company, you are indirectly the owner of that company. Now, as the company grows, as the profit of the company grows, so does the ownership, so does the value of your ownership in that company. For example, let us say you have bought 10% of a company. Let us say the company name is ABC. You have bought 10% of that company when the company was valued around 10 rupees. Okay, so you have invested around 1 rupee in that company. Now, after 2 or 3 years, the company is valued at 100 rupees. That means the 1 rupee which you had invested 2 or 3 years back in that company, particular company, is now at a value of 10 rupees. Okay, this is how the value of ownership of your investment and the returns will grow. The next thing is diversification. Okay, stock market gives you various sectors. By investing in these various sectors, you can reduce the risk and reduce the poor investment choices. This will help you in a long-term run. The next thing is liquidity. Stock market has a high liquidity. That means you can sell your shares and convert into cash very easily. Long-term wealth creations. Shares have a potential over time to create a long-term wealth through dividends, through capital appreciation, and through compounded returns. Okay, so these are some of the benefits of investing in stock market. You can also invest in stock market to beat inflation, to keep the value of your money growing. Okay, these are various benefits of investing in stock market. Now, let us move on to an interesting topic, that is stock exchange. Now, stock exchange is a marketplace or a platform where traders and brokers go to buy and sell securities. It's basically stock market, but here it facilitates the transaction between a buyer and a seller. In exchange, it charges a transaction fee. Okay, so that is stock exchange. Now there are many stock exchanges in India, but we are going to discuss only about the two primary stock exchanges in equity market. We are not going to touch commodity. Commodity has its own stock exchange. We call it MCX, and then for currency there is Forex. Okay, but we are going to talk about the only two main primary stock exchanges of equity market in India. One is BSE. It is a Bombay Stock Exchange, the oldest stock exchange of India and even Asia. It was established in 1875. Okay, and the other primary stock exchange of India is NSE, National Stock Exchange, which was established in 1992 for a better and technically advanced stock exchange. So these are the two primary stock exchanges of India. Now let us discuss about the next important term, index. Index of a stock exchange. Index in finance is a benchmark value that measures the performance of the stock market or a subset of stock market, right? It gives a scale for the investors or the traders to compare the current stock prices that of the past. Okay, that is the main thing which index does. Now there are the two indexes of the primary stock exchanges of India. Okay, for BSE we have an index called Sensex, Stocks Exchange Sensitive Index. Okay, now Sensex comprises of 30 different companies when added together, and a value is derived from that. Now from this value we compare whether the market is going up or the market is going down. If the Sensex is on a continuous gain, then we tell that the Sensex is gaining. If the Sensex is on a continuous decline, we tell that the Sensex is soaring. So this is how we compare the movement of the stock market from the index. Similarly, NSE also has its own index, which is called Nifty 50, National Stock Exchange 50, which comprises of 50 different companies, and same the value has been derived from this company, and it has created an index. Now based on this index, we tell whether the NSE market is going up or the market is going down. Considering that we have learned what is a market, what is a stock market, what is a stock exchange, and what is the index of that stock exchange, now let us ask this question: how to invest in a stock market, right? So to invest in a stock market, you need a brokerage account. First you have to decide a reputable broker. Every bank has its own security services, brokerage services. For example, HDFC Bank has HDFC Securities, Axis Bank have Axis Securities, right? And etc. etc. There are many private brokers also. For example, Zerodha, Groww, Angel One, right? These are certain private brokers. Once you have decided which broker you are going to trade with in the future, what you have to do is you have to open a Demat account or a trading account with them. Okay, this trading account will be linked to your bank account, from where you can transfer your funds to your trading account and you can invest in stocks. Before investing in stocks, you have to select which stock you want to invest in. For that, you have to provide some time for research and take certain tips under consideration. And after choosing that stock, you have to consider at what price you want to buy it. Okay, and once you have decided, you have to place the order. You have to purchase the stock, and next what you have to do is keep track of your investment, whether your investment is going up or whether it is declining. It is very crucial to enter and exit at the right time. Fine. So now after this, all this summary, let us ask this question: who is the regulating body in India for this all financial markets? That is nothing but SEBI, Security and Exchange Board of India. SEBI governs the financial market of India, not only stock market, commodities market, and other financial tools like mutual funds and debentures and everything. So SEBI is the governing body of the financial market in India. As what RBI is for the banking system, SEBI is that for financial investment. Fine. So in this video, we have discussed what is market, what is stock market, what are the benefits of investing in stock market, what is a stock exchange, and what is the index of a stock exchange, then how to invest in stock market, and what is SEBI, right? So these are the basic things that a trader or an investor should know before entering into the stock market. Moving on, we will be making more videos about stock market. So please subscribe our channel.